Probal Sen now joins in to discuss Reliance Industries, which is in the spotlight ahead of its numbers. Good to have you on board. Probal, is the expectation that we can see the refining and upstream business really boost the O2C growth this quarter?
Yes, particularly on a YY base, if you look at it, the refining strength essentially is expected to boost the OTC segment earnings, to a fairly strong level of around 159 odd billion on an aggregate basis. If you look at what that number was in Q2 of FY23, it was just about 120 billion, and most of this growth on a YY level is driven by strength in the refining business for the second quarter. Petchem, unfortunately, still remains slightly muted. If we look at, and of course, now these are our estimates since the company doesn't segregate out both the sub-segments of OTC. But our sense is that petchem margins still remain fairly muted, but refining margins, thankfully, have been very, very strong in the second quarter. And that is what drives the kind of strength that we are seeing in the OTC segment business.
All right, fair enough. And what's the expectations then when it comes to the retail business? Do you think that will continue to see strong growth, largely on the back of the kind of store additions that we've been seeing at a hectic pace?
I think retail, if you look at the last 4 to 5 quarters, has been on a fairly steady state growth trajectory. It's not been any huge positive surprises on a, if you look at on a YY basis, yes, it still, shows fairly strong growth. But retail, I think, given the scale of the business and the way it has evolved, one has to look on a QOQ level. And on a QOQ basis, we expect a steady growth from 51.5 billion EBITDA that they reported last quarter. Our expectation is they would do about 54.2 or so, which is basically coming off around a 5 to 6% revenue growth and flattish, margins for the quarter. So the momentum is definitely there. But the days of them reporting 20%, 15% QOQ increases, I think that will probably take a little bit longer time, given the scale that they have already achieved, even with the kind of pace of store additions and all the offline and new commerce momentum that they have going. But I would think, at least in the near term, you're likely to see low single digit growth on a QOQ level in this segment.
Stock has been languishing, right, for the last, I think, 34 odd months or so. Is there anything that we can expect in the earnings which could actually lift it up?
The earnings story and the fact that the second quarter results are going to be fairly strong is not really a surprise. It's not as if there is, these numbers are not there in the public domain. I think most of us are at or about a 30% YY growth in EBITDA and close to 35% YY growth in PAT. So you're right that there probably needs to be a little bit more of development around the new energy businesses for the next real big trigger to come through. I think the capex cycle probably needs to moderate a bit more for return ratios and cash flows to start to show through. And I think thirdly, there in recent times, what we have seen is, despite the fact that refining margins have been fairly strong in the second quarter, signals coming through from the market in this quarter, particularly over the last couple of weeks, have been fairly negative. That has added to the pain. If you see, there are legitimate demand concerns, particularly about China. There are concerns in terms of how much US demand can actually grow in the medium to longer term. So to that extent, I think even for the OTC segment, there are obviously a little bit of concerns flowing through. So if you put that all together, while the earnings growth story remains fairly robust, I think material triggers are perhaps missing. Having said that, the stock has fallen quite a bit, so we will review our estimates. We currently have an ad rating with a target price of around 26.50 odd, but we would definitely review the numbers and look at what the management has to say about their business outlook and the new energy businesses, and then take a call on what the stock looks like from here.
Well, great to have you on the show. Thanks as always for taking the time out. Unfortunately, we've completely run out of time on the show, so I have to wind it up right here. The recovery for the market stays put. Keep our fingers crossed. Let's see where we head from here.